Hi, everybody. Thanks for joining me. I'm Brooke Whitebread with Baird & Warner, and this week I'm going to talk about the 4 reasons why the election won't dampen the housing market, right? Today is a big day. Americans are going to decide our president for the next 4 years, and that decision will have major impact on many aspects of life in this country, but residential real estate market should be one of them. Analysts will try to measure the impact regulations might have on housing, the effect of the possible first-time buyer program, and a number of other situations based on who wins, right? The housing market, though, will remain strong for 4 reasons, and we're going to cover them. Number 1, demand is strong among millennials. The nation's largest generation began entering the market last year as they reached the age to marry and have children. And these are 2 key drivers of home ownership. The Wall Street Journal recently reported millennials, long viewed as the perennial home renter who were reluctant or unable to buy, are now emerging as the driving force in the U.S. housing market's recent recovery. They're coming in, and they're coming in full force. Number 2, mortgage rates are historically low, and you hear me say this every week. All-time low interest rates are driving demand across all generations. And if you're not taking advantage of this, you really should, right? So strong demand created by this rate drop has countered other economic disruptions like the pandemic, the recession, record unemployment. So Freddie Mac just forecasted mortgage rates will remain low through next year. This is huge, right? One of the main drivers of the strong housing recovery is historical low interest rates. So given the weakness in the broader economy, the Federal Reserve's signal that the policy will remain low until inflation picks up. And no signs of inflation, we forecast mortgage rates will remain flat over the next year. So from third quarter of 2020 through the end of 2021, we forecast rates to remain unchanged around 3%. That's great. Got to get out there. Number 3, prices continue to appreciate. The continued lack of supply of existing homes for sale, coupled with the surge of buyers' demand, has experts forecasting strong price appreciation over the next 12 months. So sellers out there, this one's for you. It is time to sell. If you have to downsize, upsize, move, relocate for work, whatever it might be, now's the time to do it. And number 4, history says so. Though it's true that the market slows slightly in November when it's a presidential election year, the pace returns quickly. So chief economist from Myers Research notes that history suggests that the slowdown is largely concentrated in the month of November. So in fact, the year after a presidential election is the best of their 4-year cycle. So that suggests demand for new housing is not low because of the election uncertainty. Rather, it gets pushed out into the following year as long as the economy stays on track. So bottom line here, there is no doubt this is one of the most contentious presidential elections in the nation's history. The outcome will have major impact on many sectors of the economy. However, trends suggest that the housing market, which has basically withstood every pandemic-related challenge to this point, will continue its strong momentum in the months to come, right? So if you're out there and you are in the market or thinking about joining the market, I'm Brooke Whitebread, and I can help you through that process. So thanks for listening this week. I'm Brooke Whitebread for Baird & Warner. This is the Chicago Suburban Life, and I'll see you next week.